Have you thought this through?
No way will that work.
Are you sure? Is there any money in that?
You'll never make any money doing that. How are you going to pay the mortgage? Just get a job.
You're going to try to sell that? Why can't you be normal like everybody else?
All right. Were your parents morons too?
The savvy entrepreneur to the rescue.
Congratulations. That really turned out well.
That's a really good job.
I'm really winning. I'm surprised.
You know, I wish I thought of that.
I never thought anyone would. How did you do that?
I'm so glad you're pursuing your dreams.
I wish I had the courage to follow my dreams.
Hello out there. Welcome to the Savvy Entrepreneur. We're broadcasting here on WLCB 101.5 FM from the greater Chicago, Milwaukee area. I'm your host, Doris Nagel, and I'm a crazy entrepreneur myself. I also love helping other entrepreneurs. I've counseled lots of startups and small businesses as part of my law and consulting practice over the past 30 years. Not only that, I've started or helped start at least 9 different businesses. I've not only seen a lot of mistakes, but I've made a lot of mistakes. So our show here really has 2 goals. 1, to share helpful information and resources, and 2nd, to inspire entrepreneurs. Hopefully make your journey as an entrepreneur faster and easier, maybe just a little bit more fun. As always, I welcome your comments, questions, suggestions. If you want to be a guest or know someone who'd be a great guest, or just to share a resource you found, email me at dnagel, N-A-G-E-L, at lakes plural, lakesradio.org. And so, without further ado, I'd like to introduce our guest for today, Lil Roberts, who joins us by phone all the way from Florida. She is the CEO and founder of a company called Xendoo, which specializes in online bookkeeping and accounting, which is focused on small business owners with less than 20 employees. So lots of you listeners out there. According to Lil, Xendoo leverages technology and proprietary software to increase the productivity and traditional workforce of small companies by some 500%. Xendoo has received a number of awards, including most recently South Florida Business Journal's 2020 H. Wayne Heisengate Startup Award, as well as numerous other awards for startups and small businesses. Now, just a couple of words about Lil herself. She's a South Florida native and prides herself on building customer-centric companies built on teamwork, technology, and integrity. She's a serial entrepreneur with a passion for small business and is known as an innovator with the enviable ability to foresee market trends. She successfully exited from the manufacturing industry, after which she founded Xendoo, a cloud-based fintech company, and it's based in Fort Lauderdale. One other item of note, she appeared on the premiere episode of CNBC's The Job Interview. She's an active member of the South Florida chapter of the Global Entrepreneurs Organization. She calls herself a lifelong learner and fosters a professional working environment where people have the opportunity to continuously grow and develop. Sounds like a fun place to work. Lil, can't wait to hear more about it. Thanks so much for being on the show today. Welcome to the Savvy Entrepreneur.
Thank you, Doris, and great honor and pleasure to be here with you tonight. So thank you so much for having me.
Thank you. You know, I think the best place to start is really for listeners to hear a little bit more about your background in your company. So your bio says you left the manufacturing industry. I assume that was more bigger companies. But how did you go from that to deciding to found Xendoo?
Thanks, Doris. You know, like yourself, I've had 8 or 9 businesses, and they've all been in different industries. So the last time I worked for somebody was in the early 80s. And as they say about entrepreneurs, right, that we're unemployable. We see the world through different eyes. So I'm sure all your listeners out there relate to that, you know,
Yeah.
we walk in places and we see a problem. We want to solve the problem. We probably all were, those of us that are old enough, took apart our alarm clocks and to put them back together just to see how they ticked, right? But I've done product businesses, I've done system integration businesses, and then I went into the manufacturing space. And I just love business. I love small business. So I sold my last company in 2015. and it was in an industry, it was in print manufacturing, and it was an industry that, I watched really become a commodity industry and do a race to the bottom as to what's the lowest price. And I watched technology just basically decimate the industry.
Yeah.
And I was able to get a successful exit by re-engineering the business over and over and over again, because there's always customers for your business. It's a matter of how you engineer the company and what solution you're providing. And then is it a big pond to customers or a smaller pond to customers? And it's figuring all that out, right? As technology changes all of our industries. So when I exited that business, I said, what do I want to do next? What's the next business that I want to do? And I just love small business. I'm like you. I just love it. I bleed small business. And I think that all of us small business owners out there, we're the backbone of America, right? We employ collectively the largest group of people. And when I say small business, I'm talking about, small business can be defined as 50 million in size and smaller. And I think a small business really as the 15 million down to 100, 200,000 a year in gross revenue. And I knew that there was a gap for a problem being solved for small business owners of having accurate and timely financials delivered to you for a fair price. And so I wanted to be part of reshaping an industry with technology by bringing transparency to it, by bringing accessibility to it for small business owners, and by doing that through a technology platform.
Well, there's no question about it that as companies get started, they need lots of different kinds of help for sure. And certainly tax advice, accounting, bookkeeping, finance, the whole gamut of things financial are certainly something that a lot of entrepreneurs either don't know enough about to do themselves, or know enough to maybe be a little dangerous, or in some cases maybe they do know about it, but it's not really the highest and best use of their time, right?
100%. And it's not the sexy thing, right? In a business, the fun part of the business is the part where, you're delivering a product or building a product or taking care of the customer. And that's where, we all as business owners and entrepreneurs tend to spend our time. And the financials really are the part of the business that always gets put to the back burner. And a big reason is because when you're doing monthly financials, your monthly financials are the look back. It's the scorecard of how you did, right? And people are always, forging forward. And you really need to take a look at what your financials were for the last month so you can tweak and see how you can do better next month and see what your business needs.
Yeah. So what makes Xendoo and your services unique? Is it the model, the pricing model, or the online platform, or some combination of that, or something else?
I think it's a lot of little things. At the high level, what we feel is that we are bringing the transparency and the accessibility to the small business owner through putting a flat rate price, right, for the package. So you have full visibility on what you're getting, and we deliver with accountability, no pun intended. So we deliver our financials by the 5th business day of the next month, which is unheard of and really unprecedented in the industry. And so even our online competitors, they deliver by the 15th. And it's through our proprietary software and our workflow processes that for 65% of our customers, we deliver it by the 5th business day. But if you take and say, what I feel is the unique ingredient that we do, we're customer obsessed for our customers. And in an industry when oftentimes customers are overlooked and underserved. So traditionally in the accounting industry, customer service is not what you think of when you think of the accounting industry. And we're leading with customer service, financial peace of mind. And we do that through technology, of course. But really what we deliver is the financial peace of mind.
The other thing that I think is kind of interesting is that I've worked with a number of startup businesses, and a lot of them acknowledge they need maybe a part-time bookkeeper. And usually what they look for is maybe a stay-at-home mom who was a CPA or an accountant. Maybe it's a retired person. Maybe it's somebody who has this as their business model and they work with a handful of companies. The challenge that I see is really twofold with that, and I have a feeling you're going to agree with me. One is that it's difficult with that model to scale as the business hopefully grows. And the second is that it's often difficult to be proactive in identifying issues, because I think a lot of those folks seem to view their job as more clerical. You know, if you look at everything from the gamut of, yes, there's data entry and forms to be filled out, but there's really a role almost for, a CFO kind of position, maybe not full time, that I think takes on a much more strategic, much more proactive role. And I'm guessing, although I don't know that, your business may be able to help fill a couple of those gaps there.
Yeah, so you're right. Like, we don't do the fractional CFO on the go forward, right? We're doing the monthly financials, the profit and loss balance sheet, and then the tax return all for a flat rate price. But you hit it on the head that people will go out and they'll find a retired CPA or a work at home mom that maybe went through, or a work at home dad, or just somebody who does bookkeeping. And typically they're going to pay a minimum of $40 an hour, and they're going to pay a few hours a week, and it's going to be, call it $500-$600 a month. And what they're missing out on is that they're missing out on having the CPA tax advice and strategy throughout the planning and maximizing their tax savings. If somebody's just doing bookkeeping and not doing it through a tax saving lens, then they're going to leave money on the table. And also how they can use money that may be spent towards taxes and use that to invest in the business. So there's a lot of opportunities there. But, the bigger picture is that there's so many business owners that don't do any of it. They just don't even do their books until they think about their books in March when they want to do their taxes. And that's when they leave a lot of money on the table.
Interesting. How has your business grown and changed since it started?
We started in late 2017. And so we doubled. This year, with the pandemic, we're up 30% this year, but we're a VC-backed company. And so we're venture-backed. We have the founder of AOL that is an investor in our company, as well as Jason Calacanis, who was an early investor in Uber and Calm and Robinhood, and also Deep Work out of Florida, a great VC company. So, our job is to scale and grow. My personal goal is we want to scale to 15,000 customers. That's 15,000 customers across America. We have customers in 45 of the 50 states. But my real goal here is, yes, we want to have 15,000 customers, but every business owner that comes our way, Doris, we want to help them, whether they're a fit for us or not. If they happen to stop by us on their journey, we want to make sure that we help them in any way that we can, which could be just a referral of some kind of technology that they may need for their business, or just some information that they need.
Interesting. You made a point that I want to expand on just a little bit, which is, you said whether they're a fit for us or not. So what kind of businesses are a good fit for these kinds of services, and which ones might not be?
Yeah, well, thank you for asking. The top two groups of customers that we have are e-commerce businesses, because a lot of traditional accounting companies aren't as familiar with how the e-commerce businesses function and all the tech stacks that they have in there as far as integrations. And then also professional services, which covers a wide gambit. But we have businesses, we have the craziest businesses across America. I just love it. It is so amazing. I can share with you, we have a guy who buys books by the truckload, by the semi. And he sells them on Amazon. He takes the books that he thinks will sell, from libraries or estate sales, and he sells them on Amazon.
So you wonder where those used options come from when you look at a book and it says other options available used, right?
It's amazing. It's amazing. We have a couple of different TV shows that are customers. We have a car broker that sets up the shoots for any kind of car that's needed on a movie set. And so And then we have all your standard everyday businesses, right? Like cleaning companies and pool services and HVAC and you name it, we have it. Gyms, we have a lot of gyms and, some hospitality. So it's across the board, but I mean, we love it. It's amazing to see how the entrepreneurs of the United States build and find businesses. It's truly fascinating.
When might they not be a good fit?
So a law firm that's doing escrows or trusts, that wouldn't be a fit for us. Somebody who wants us to pay their bills, which I don't recommend small businesses outsourcing paying their bills. I see way too many business owners that have been embezzled, right? So companies that want us to chase receivables, although we have a technology solution with one of our partners that for people that want to improve their receivables, that is an automated way that just reminds customers to pay, and it actually works. So we don't chase receivables, we don't pay bills. And if they have, if they're a construction company doing job costing per job, then they're not a fit for us. But if they're a construction company or a real estate investor that's buying and flipping, they're a fit for us. So just about any business with less than 20 employees are a fit.
So I guess the answer is probably yes, but you must have had businesses who probably graduated from your services too.
Yeah, we do. From time to time, we do. Typically when they get past 15 million in top line revenue, then they're going to have their own, and depending, like 15 million on the e-com, because 15 million on e-commerce, you may only have 8 or 10 employees. But businesses reach, in the cycle of business, they reach a point where they bring everything in-house. But we've had many of businesses that have reached that point where they bring certain things in-house, but they still want us to take a look at the books. It's that second set of eyes. It's making sure that everything's in proper order. It's a checks and balance system for them. And then also they need their taxes done. So even if they bring it in-house, they still need somebody to take care of their taxes.
Yeah, it's a great model because I'm sure there are businesses who have been with you for quite a long time.
Yes, we've been really, it's wonderful, especially during the pandemic. There's a lot of, very hard stories. We've been really blessed that the majority of our customers have navigated the waters of the pandemic. They have stayed in business. They have found ways to re-engineer their business to have greater profitability and to adapt and adopt what they need to during this time. So, the resilience of small business, the heartbeat of it, to watch business owners in action is just amazing. To be part of their journey, it's truly an honor.
Well, they're certainly a very nimble lot, having worked in large corporate America with capital C, capital A, where I always said it was like trying to row the Titanic in a different direction. It's certainly fun to watch small businesses who are way more nimble than big companies in most cases.
So true, so true. A lot of event companies have, they pivoted and they've become logistics companies, and they've, moved into PPE, and you find a way, right? That's what the entrepreneurial world is. And I mean, your listeners all know too well, there's probably many of them that are listening right now that it's resonating with them. They had to do what they needed to do to survive. And when you are, I always say, be water, right? If you can be water, water finds the way. And, and that's it. You just got to stay moving.
Yep. I'm just thinking about one of my clients who I spoke with a couple days ago, and it's a floral shop. Things have been a little slow for the flower business, although there have been sadly more than our share of funerals. There just haven't been big weddings and big corporate gatherings and other kinds of, debutante balls and proms and you name it. And so she's branched out into candles and gourmet food and chocolates, and as a result has been partnering with other local companies. And, I kudos to her, she just saw the writing on the wall and decided to do something about it. Will this be successful? Who knows? But I'm guessing even if it's not, she'll probably think of some other options. Kudos to her, right?
Oh, totally. Good for her. And that's what it is. It's that we all have that outlook that the glass is overflowing. And at the core of it, it doesn't matter what business you're in, we're all the same, right? All business owners, they're all positive people wanting to do something that is great for customers and take care of their family, take care of their work family. And it's a beautiful thing.
Yep, it is. It's cool. Well, let's switch gears here. I know today we wanted to focus on a specific topic. There were lots of things I know that, Lil, I wish you didn't live in Florida because I sure would enjoy sitting down regularly with a cup of coffee. I think I would be better informed and a better entrepreneur if that could happen. But
Oh, thank you. Thank you.
But for today, I know we wanted to focus on a specific topic, which is cash flow versus profitability, which doesn't probably sound all that sexy, but it's a topic I know you're passionate about, and I'm sure that you're passionate about for a reason. So first, let's just make sure everybody who's listening understands the concepts. What is cash flow and what is profitability?
Yes, and then I'll share with you why I'm so passionate about it, and I think you'll feel the same. So cash flow, it represents the cash coming in and out in the business, right? So when you have cash flow coming in, it means that there's money there, there's money for you to pay your bills at that moment, right? But it doesn't tell you if the company is profitable. Profitability is the understanding of knowing, are you making a profit on what you're doing? So does the excess money after you pay the expenses, your fixed expenses and your variable expenses, is there money there, aside and different from cash flow? And we'll get into it a little bit more. But if you like, I'll share with you why I'm so passionate about it.
Well, first I want to make sure as part of the definitions, and I definitely want to hear why you're passionate about it. I know our listeners do too. I'm no accountant, but I know there are different definitions of profit. There's gross profit and there's net profit and there's profit after taxes. So when you talk about profitability today, which measure of profitability are you focusing on and why?
Net profit before you take out for depreciation, amortization. What is your, take a look at your top line. Let's say, you do $100,000 in sales and your expenses, your cost of goods were $20,000 and your fixed expenses and payroll was 70. So that equals $90,000. So now you have a net profit of 10 grand, 10% before you now pay tax, right? And a business has to be profitable. Cash is the oxygen, but you have to be healthy too. So if a business doesn't have profit, so if it's a business model that's not based on earning a profit, then cash is just the oxygen. You're living on an oxygen tank. And when the oxygen tank runs out for whatever reason, you're not going to breathe. You have to have a healthy physical engine running, right? Or you have to be healthy as a human, right. And then oxygen, feeds you, right?
Right.
And then we can get into some instances where people have cash flow, but they're not profitable, or where they're very profitable, but they're starving for cash.
And so I think that segues to why you're passionate about this, because I have a feeling you've got some great stories to share along.
Yeah, thank you. Well, at a high level, there is a statistic that is out there from US Bank that is staggering and very sad to me. And it's something that we want to be part of changing. And so the statistic is from US Bank is that 92% of businesses, of small businesses, less than 20 employees, they run their business from their bank account. Now, of those 92% of small businesses that run business from their bank account, it means that they don't do monthly financials or any financials to take a look at the financial health of their business. Of the businesses that fail, whatever percent that is, and in small business, 30% of small businesses fail every year for just getting up and living. They go out of business, they sell their business, they close their business, all kinds of reasons. And this year, unfortunately, will be much greater than that. And of the 30% of small businesses that just fail 2.5% a month, no matter what, of that 30%, 82% that fail were actually profitable. They ran out of cash and they didn't have the visibility to know that they were so close and that their business was actually profitable.
Wow.
And
That's heartbreaking. Well, and I'm guessing that just operating from your bank account is different than optimal cash flow management, right?
100%.
Conceptually, it's also kind of far from just, hey, do I have money in my account today to pay my employees? Yes, I do. Oh, good. Here's payroll.
Yeah. Look, technology is a blessing and a curse. And because of technology, people have online banking. They can see what's in their bank. They have apps that show them the revenue, but don't show them their fixed expenses or don't show them the bills that are up and coming. And so you see, one side of the story, and that's never great, right? And all of this is not things that small business owners want to think about. So what I like to say to small business owners is that you have to understand your profitability first, right? You have to understand your business model. And you don't have to do a fancy spreadsheet or anything like that. One of my favorite things is back of the napkin. When I was vetting out this business model, I did a lot of back of the napkin because you can do a big spreadsheet and there can be errors or, formula errors in a spreadsheet. And then now you're looking at something that you think is one way, but not the other, right? So,
or worse, you just don't do it because it sounds daunting, right?
100%. So if there's a couple of nuggets that the wonderful business owners listening to you tonight and to us that could walk away with, let's break it down into a couple of things.
I hate to do this to you. We have to take a break for station identification and a word from a few of our sponsors. So hold your breath, everybody. Lil will be right back and share those nuggets. This is Doris Nagel, and you're listening to the Savvy Entrepreneur Show. Before the break, we were talking with our guest this week, Lil Roberts, who's the founder and CEO of a company, a bookkeeping and accounting software company called Xendoo. And she was sharing with us the difference between cash flow and profitability. Just before the break, she was about to impart a couple of golden nuggets. So those of you who have been waiting patiently since our station break, Lil, it's time.
Awesome. Thanks, Doris. Well, let's start with the back of the napkin exercise that all small business owners can do, right? So we all need to know, what are our fixed expenses? So fixed expenses are things that, if you don't unlock the door and get $1 worth of business for the month, that you're going to have to pay for regardless, right? That is your rent, it's insurance, it's phones, it's any of the other things that are, it's labor for your team. Yep. So all of those. So it's important to know how much money do you need that is just for your fixed expenses. Mm-hmm. And then you have to look at your variable, and your variable are going to be, if you buy your product for $100 and you want to make a 30% profit on it. This is the area that I see over and over and over again that small business owners miss when they're figuring out the pricing. So if you buy a product for $100 and you want to make 30% profit, most people, the answer will be, what do you think their answer will be? It'll be $130. Most people will say that if I want to make 30% profit on a $100 product that I bought wholesale.
Oh, yeah, because you haven't covered your fixed and variable expenses, really.
Well, even greater than that. Even greater than that. They're doing the opposite. When you take what your cost is, you have to use a factor, and the factor is 1.44 or 1.41. I'll have to grab my calculator here for a 30% profit. So the easy way, and the people listening at home can grab their smartphones and they can say, okay, $130 times 0.70 equals $91. It means you shorted yourself. You would have had, in order for a 30% profit at $130, you would have had to pay for the goods $91 to get a 30% profit. Did you just do that on your calculator as well, Doris?
Yep.
And if there's one nugget to give everyone, it's take a look, because If that's how you're pricing your goods, you're leaving money on the table. You have to get to what's the 30% profit, right? If you take $100 times 1.44, and Office Depot sells these wheels, right? So if you take $144 times 0.70 for 70% cost, it equals $100.80. And that gives you a 30% profit. So it starts right there at the core. If you're figuring profit, we're taught in school, oh, what's 30% on $100? Oh, that's $30. So, 30% off. So if I pay 70 for something, it's wrong when you're selling a good. So for all the product businesses listening to you and listening to us right now, take a look at how you're marking your products up. If you're not marking it up with a factor, so 1.44 equals 30%, and there's these margin wheels that you can buy online, or you can buy at Office Depot or any office supply store to figure out. Because what if you want a 25% profit? I think that's 1.36 or 1.31, but you're leaving money on the table. And so right there, it's about understanding your profitability in your business. So one, what do you need to sell your products for to make a profit? And profit equals after you pay for the goods of the profit and you cover the overhead. Now, here's where it gets tricky. If your fixed expenses for the month are $10,000, how do you factor that? You have to now make some projections. How much do I need to sell before I start making my profitability? How much? So in order to cover $10,000, if I sell $100,000, 10% off the top is going for my fixed expenses.
Right.
So it's about understanding all of these different pieces. So now if you, in the same space, instead of selling $100,000, if you sell $200,000, now 10%, your fixed expenses equal 5%. So you have to understand what percentage of each sale has to go to, first, what do you think you can sell in a month? Then what percentage of each sale has to go to your fixed overhead, and what percentage is your variable, which is the cost of your product. So before you put everything on sale to increase your cash flow, so now here's where cash flow comes in, where you can have cash flow and not have profitability. If you start just trying to liquidate all your inventory, sure, you're going to get a bundle of money in the bank, but that bundle of money in the bank is not necessarily going to allow you to buy more goods. All you're doing is just kind of being a hamster on a treadmill if you don't understand the relationship between your fixed expenses, your variable costs, and what is true profit before tax.
It's interesting. I have worked with a number of small businesses in the manufacturing space who have done some really what I would call lowball deals, and they claim for overhead absorption. So is that good idea to do or not? Or when might it be or when might not it be?
Yeah, great question. So the old saying is when you can cover your nut, right? And your nut is what is the amount of money you need to have to cover your expenses. So if you know you're going to sell $100,000 and $20,000 is going to be cost of goods and $70,000 is fixed expenses and payroll, so $100,000 is going to give you 10 grand in profit. Well, now if you picked up this great opportunity of another $20,000 in inventory that you just want to liquidate because it's the season, you don't need to hold as much of a profit margin on it because you've already covered your nut. That first 100 grand already covered your expenses and your cost of goods, right? And so you know you already got 10 grand in profit. So now this next 20 that you sell is just incremental margin.
Which is a good thing.
It's a great thing. But if you're running your whole business on that model and you haven't covered your nut, that's the recipe for going out of business.
That reminds me of my father going to shop at the Aldi chain. I don't know if you have those in Florida. It's a bargain based grocery chain with a family of 6. But he was so enamored with the deal that he would fill up his shopping cart with stuff that we never ate. So
oh my God, you know what? Don't get me started. Don't get me started, Doris, because I got to tell you.
Yeah, you're going broke spending all this money on cheap stuff that you didn't want. I mean, it's that kind of mentality, right?
It's the BOGOs. So just was having this conversation with some friends 2 weeks ago. The BOGOs are designed for people to buy stuff they don't need. And it's incremental margin for those companies. You're 100% right. But people don't understand is that the most valuable thing you have is money in your pocket, right? Well, aside from, of course, a good heart and all the altruistic side, the most valuable thing in a business sense, cash is king, money in your pocket, but it's also in your personal life. So the idea of the merchants are they want to get money out of your pocket. Same thing with credit card companies, right? With all these different products of, you'll get extra miles this way, that way. They just want you to put the stuff on the cards and then start paying interest. Or American Express doing payment over time. Unbelievable for them. One of the most horrible things for all people with American Express, because they automatically put certain purchases on time. And if you check what that interest rate is, it's ridiculous. So keep the money as business owners, keep the money in your pocket. When somebody offers you a deal, you have to say, what's the value of that money? And if the value of that money is that, okay, you're going to make a 25% return by paying up front for something, well, that's pretty good. That's really good because you're making 2% per month. If that's a product you need and you're going to use no matter what, and you have the cash flow to spend it on it, you just made 25% on your money all day long. Sign us all up for that, right?
Right. Interesting. So you have a number of businesses in the professional services segment. Let's talk about profitability versus cash flow and really product pricing when it comes to professional services. I certainly have seen and have struggled on a personal level sometimes with pricing products and even kind of fought with clients. It's hard sometimes because your product is the result of a lot of work for other clients, which oftentimes makes, the lawyer's agreement that you could crank out in 15 minutes really isn't 0.25 of an hour. It's some combination of all the hours you put in with other clients and building the knowledge base and having resources at your fingertips. How in the world do you apply these concepts for professional service firms?
Yeah, so what you just described is from the practitioner's mindset, right? The practitioner thinks, well, they're getting the benefit of the network effect that I help this client, that only helped me be smarter to help that client, that helped me be smarter to help that client, that helped me be smarter to help that client. Why should client number 5 have to pay for all the other learning from the customer side of it? Why should client number 5 have to pay for all of that? Because the practitioner got paid every step of the way along the way, right?
Yes and no. They may have written off a lot of their time. And I would counter that and say, that's not how manufacturing businesses price their products either. They go out of business because they have a lot of money tied up in terms of the tooling and maybe the R&D and the intellectual property. Exactly.
Oh, 100%.
If you only priced your product based on, and this is what we were talking about a little bit before, if you only price your product on what it costs you directly in terms of components and cranking out that item that day, it would be a very different price than a lot of things are priced today because there's all these other things you have to factor in.
Well, and I'm with you, and we're going to get into a little lively discussion here that I love, and I'm with you. So I didn't say which side of the fence I'm on. I don't have a dog in the fight either way, right? What I'm saying is that practitioners are going to look. So here's where the disconnect comes in a lot of the professional services. Because look, the industry that Xendoo is in is really, we're a tech company, we're a fintech company, but we're a fintech company in really the professional service space, right? And so what's happening is technology has come knocking on the door of the professional service space. So Watson, which, IBM has Watson, they say that 70% of all attorneys graduating right now won't have jobs in 10 years because technology is replacing them. So unless that they are very, very specialized, the stuff that is done over and over and over again that is not very specialized. But let's look at it from both sides. The customer wants to pay what they feel is a fair price, right? And then the practitioner wants to be paid for that they feel that, they have aged like a fine wine, and that instead of being an off-the-shelf wine in a box, that they want to,
yeah.
they want to be paid like they're Silver Oak, right? Or Camus, some
Right.
delicious big bold cabs. And look, there's a happy median amongst it all. And so a couple of things need to happen. So you said, well, they maybe didn't get paid from all their clients. In today's world, in my opinion, in today's world, I don't believe there should be receivables. I believe in today's world, everybody has been conditioned to pay when the service is performed. So if you are professional service and you are sending out receivables to be paid 30, 45, 60, 90 days after the work is done, that's not fair to you as a business. And lots of times we stand in our own ways. Just like when you say to somebody, oh, maybe you should raise your prices. I'm sure as you coach businesses, you may say to them, maybe you need to raise their prices, because if all their ingredients and all their goods are going up, of course they need to raise their prices. And it's their mindset that gets in the way, because their customers love them for them, and they're not going to walk out the door because they didn't get, they can't find that most amazing lasagna or whatever that business is providing.
Yeah,
So,
no, I think you're absolutely right in terms of receivables, or in terms of getting even retainers from clients, because they're certainly, your wine analogy, I think, is extremely apt, because fine wine is not something that you uncork and then drink 60 days later. It's what have you done for me today? The wonderful thing that you did 60 days ago or 45 days ago suddenly is not quite so wonderful. And the long hours that were put in to rush to make it happen for a client's deadline, not quite as valuable or not as fondly remembered. So I think you're absolutely right. There is a recency effect, particularly when it comes to professional services, that is a direct correlation to when you need to be paid.
oh yeah, they should be paid. I'm a firm believer, and we tell all of our wonderful customers, get paid. There's enough technology, and everybody's used to technology. Have your tech stack for your business, your technology stack for your business, of how you're doing business with customers. And look, we've seen it through the pandemic. A lot of businesses retooled into a digital format, and a lot of businesses will tell you that they're more profitable now. And so you have to look at your business. Every year I would look at my business as to what we needed to do to be more productive, because it's also, I believe, the responsibility of us as business owners to make sure that we're keeping up with proper pricing for our customers based on what they can get on the open market, right? And I think that when you can, and us as business owners are also entitled to make profit. Like, we're taking great risks to be in business. They're entitled to make profit. So how do you find the balance, the right recipe to marry all that together? And I think that, it starts with, you have to look at what is your profitability in your business. And then profitability is really just an exercise of, what are you buying your product at, or what are you delivering your product? So if you're a professional service, your product is time. If you're a business that sells a product, your product is whatever the product is, a bottle of water, a baseball cap, dinner, whatever it is. So on that, it's up to us as business owners to always stay on top of what are our costs in our business, right? How do we help trim those costs in our business so we understand, do we have the right pricing to be profitable? And is that right pricing market ready or market accepted, right?
Mm-hmm. Yeah.
And then from there, then say, okay, now how do I ensure that I'm not going to have to write off lost money from either bad product that we are giving our customers because it was damaged, or missing deadlines, and now we have to give them discounts on professional services. And
Right.
then that, leads into your cash flow, right? And if we can, just on the topic of businesses with products, the businesses that may be profitable but suffer in cash flow, they may have too much money in inventory, so they're buying too much inventory or doing a poor job of managing the inventory. Every industry has a formula of what your turn of inventory should be. And it's important to understand that. Now with Google, there's no reason why you can't understand, what your turn is. So if your inventory should be that it's 20% of your sales, then that means that you're turning your inventory. If it's 20% of your sales, you're going to turn it in 5 weeks, right? Or 5 months. And depending on if it's monthly sales or weekly sales. And so figure out that. And then on the flip side of having too much inventory, it's if you have too much money on the street. If your money is sitting out on the street, it's not in your hands to make money on, because most business owners don't realize that money itself is a product.
Elaborate on that a little bit.
Yeah. So most people think that money is a tool or a mechanism. Well, no, money is a product. If your business if you leave, say, $300,000 in the bank, in my last business, it was manufacturing. So I didn't sleep at night unless the business had $350,000 in the bank at all times. And the reason being is that if we live in South Florida, so if there's a hurricane, I knew that I could cover payroll for, a month, and I knew that I had enough money to cover my bills. And before, in Florida, we have the insurance to kick in for hurricanes. So every business has that number depending on the size of their business. And whatever that number is, that's your hard deck. Don't go below it. So if your business needs $10,000 to cover the bills, when there's $10,000 in the bank, you're broke, right? But if you have $100,000 in the bank and you only need $10,000 to cover you, that's your deck. Now, what are you doing with that product of $90,000? Do you have it in interest-bearing accounts? Do you have it doing something that itself will earn money for you? How can you make money on your money safely? And, maybe making money on your money is that you buy real estate. You buy a piece of real estate for your business to reside in. There's lots of ways to make money on money, but most people don't look at money as a product until you sell your business. After you sell your business, and now you don't have any other distractions, and you're sitting there with hopefully a bucket of money, you go, oh boy, what should I do with this bucket? Well, that's when every time we have a bucket, right, we want to turn it into something, we want to create a business out of it. So
yeah, no, that's right. That's absolutely right. That's another great insight. So we're rapidly approaching the top of the hour. I told you the time would fly by, and so it has. How do companies, what should they do if they're not a client of yours or a firm like yours? When should they think about reaching out for help? And how do they know how to find somebody who's the right fit for them to help them?
Yeah. Okay. So let's break them and let's take them in little chunks. So first question, when should they reach out for help? So, I can tell you that we typically will say to a small business owner, wait until your gross sales, your top line sales before expenses are, $20,000, $25,000 a month, because I never want to spend anybody else's money. And then, we'll be able to help you save taxes, because I look that when our customers do business with us, I want whichever plan they choose with us, that they are making money on that. They're getting a return on that. So if they're in a plan that's $300 a month, it's $3,600 a year. I not only want to save them that minimum in their taxes, but we want to help them make money on that, right? And lots of times, our head of tax is a brilliant guy, a forensic, and he did some due diligence on one of the NFL teams, and he'll save people $10,000, $15,000, $20,000. It's amazing. And it's about making your money work for you in the business, and you need that visibility all year long. I see business owners that are serial entrepreneurs that they will start day one, and I'll say, to the team, hey, they don't have sales yet, and the team will tell me, no, they wanted to start because they've done other businesses and they hate doing bookkeeping, and they just want to start it from day one and make sure everything's in proper order. So if you have the money, start day one. If you don't have the money and you're bootstrapping the heck out of it, you want to have your books done as soon as you can afford to do it. And believe me, it's an investment that you're making in your business. It's an investment that you're making to have less stress for yourself, to not cause problems in your personal partnership, to not have, your wife, your husband worrying about, can you guys go out and buy a house, buy a car, do all the things that you want to do? Because, as self-employed, we all get dinged when it comes to the banks. They want to see extra documentation on all of us. So get your books done as soon as you can. The second piece of it was that, if you don't mind, Doris, the second part of that, if you'd repeat that.
Well, and how do they find a service provider that's the right fit for them? What should they look for?
They should look for a company. They don't have to stay local. Those days are over. In fact, a lot of people reach out to us and tell us they don't want to be local. They want it to be online. So they should look for a company that has the same values that they do, right? I think when we do business with anyone, it's about, if you as a person, the listeners listening right now, value customer-centric organizations, then you want to make sure whoever you choose is customer-centric. And you can tell by looking at their website. You can tell by calling and talking to them. Is there a phone number on the website? If they're a company, and not just for accounting, but in anything, how many companies nowadays don't even talk to you on the phone? They don't have a phone number on their website.
Pop-up chat, though.
Pop-up chat is great, right? But once in a while, and look, most of our customers chat with us, but through live chat, through pop-up chat, or email or text messaging. But it's really about finding a company that has the same values that you have, and that you vet them, and that they're knowledgeable, and that you feel that the price that you're paying for the goods and services are in line with what you think it should cost.
Great summation. We have time for one very last question, which is an important one for you, which is, if people are interested in learning more about any of the things we've talked about today, what's the best way for them to reach you?
Well, thank you, Doris. So the name of our company, as you said, is Xendoo. It's spelled with an X, so Xend as in door, oo.com, so Xendoo.com. And they can email sales@Xendoo.com. They could email me. I'm lil.roberts@Xendoo.com. Or they can call our number on the website, or they could use the pop-up chat. We'd love to chat with them. So we're all about small business. We live and breathe small business.
Fantastic. Lil, it was a real treat having you on the show today. Thanks so much for your time and for being on the Savvy Entrepreneur. Really appreciate it.
Thank you, Doris. Absolute pleasure. Love spending the time with you. And a big hello to all the Chicago people. I love Chicago. Great place to go.
And our listenership goes into Milwaukee, the Milwaukee area too. And Milwaukee's a great city too, not to make them, our little sister, feel left out.
Not at all. I'm a big Green Bay fan and a Bears fan.
Well, all right. Just stop right there.
I love them all.
I'm just kidding. Lil, again, thanks so much. That is our show for this week, folks. Thanks so much for listening. Thanks again, especially to our guest today, Lil Roberts, founder and CEO of a company called Xendoo, who joined us this week to talk about two important concepts for any business: cash flow and profitability. Now, you can find more helpful information and resources on my website, globalocityservices.com. There's a library there of blogs, tools, podcasts, and other resources. Be sure to join me again next Saturday at 11 a.m. Central, noon Eastern, when we'll have another great guest and topic. But until then, I'm Doris Nagel, wishing you happy entrepreneuring.